Hey, how you doing? Justin Brennan here with the Brennan Pulley Group. So we are super excited to present Sycamore Creek, a 200-unit Class Solid B value-add opportunity in that northeast corridor as you head from San Antonio to Austin, Texas. About 28 minutes north of downtown San Antonio and about 48 to 50 minutes from Austin, Texas. So we're going to go through the pitch deck. I'm going to go through some of the kind of the backstory, my information, my back information about the property that you may not even know or get within the pitch deck when you're going through it. So let's go. Okay, so here we go. We got Sycamore Creek. 200 units, Class B, 1984 product. Here's some of the kind of the aerial views. You going south, west, and north towards the property and away from it. Key components to know: crime and low, good schools, jobs are good, median income's high, median home prices are high, and the community is a good community that's surrounded by a lot of opportunities. So that's why we really like it, just based on location, location, location. So, and we'll go through that here in just a minute. So the property executive summary when you're going through the pitch deck. It's kind of going to give you kind of the business plan if you want to look at it that way. Key component to take away from it. We initially were going in with about 75% loan to cost on that leverage. Okay, based on probably what you're seeing in the market, what we're obviously seeing in a manner, and to protect capital and make sure we have a good asset on our hands, we're deleveraging the deal. And yes, that means returns are a little bit less, but that also means the deal's safer. So now from 75, we're going down to about 62% leverage on the deal, which is amazing, right? It's going to help protect us, give us better cash flows long term, and ensure that if we get into inflationary problems even worse than we are now, or higher interest rates and all that, we can kind of ride through those rough waters, get to the upside. Because the key component with this one, great asset, amazing location, long-term hold on this thing, or even short-term 3 to 5 years. We just need to get through any kind of rough waters that may or may not be there. And we have to kind of plan ahead, not just be these syndicators out there putting numbers on a piece of paper that are pie in the sky, and then if anything changes, we're kind of up what's creek. We want to make sure we're deleveraging and protecting our money, your money, and everybody's money, and most importantly, the assets, so we can get through anything that may arise. So that's why we're doing it this way. So the offering itself, just kind of going through this, you'll see it purchasing it for about $30,750,000. Annual returns projected for LP investors around 18 to 20%. We're bringing in more equity now, like I'd mentioned, 12 to 14 million. You got the equity multiple 1.95 to 2.2. We got about $2.4 million in a CapEx renovation budget set for both interior and exterior. Cash on cash returns projected around 7 to 10%. Kind of goes through the benefits, and then a 6% preferred return. Your benefits really for all of us, right? We got cash flow, we got profits, tax shelter, and inflation. The property's currently occupied almost just under 97%. A good solid Class B asset. We're going to be running a nice little assembly line so we can keep the property pretty well occupied while we're renovating, right? That assembly line set up, so that way we're at least producing cash flows within those first 2 years, which are typically the heaviest lift as we get fully renovated for a refinance event, typically around year 3. So what does it look like? Minimum investment of $100,000. This is going to go through all the metrics of what you can anticipate as projected returns, etc. for you. This goes through the capital stack from general partner to Class A, limited partners, goes through the debt stack. It's notating here how we're taking on a safer play with this with only 60 to 65% debt on this property and buying a rate cap on the interest. So that way, in your kind of rising costs, rates, etc., this means the returns are a little bit less, but the deal is safer, right? Protection of capital in these kind of uncertain markets. When real estate is still an incredible investment, you just need to finance it right. Also, what we're doing on this deal to make sure the returns are healthy enough is 100% of the cash flow is going to the limited partners, yourself, okay, until a hurdle of 15% IRR. And then it goes to a 50-50 split. So that way on, return of capital is 100%, cash flow is 100%, all to the limited partners yourselves until you get either an IRR of 15%, which you'll have, and then the full return of your entire capital before we're getting into the profit splits on any capital event, refinance event, and so forth. So timelines for this. We're in escrow right now here in April. Funding's already started here for April. Planning to close realistically at the end of June, early July. But we definitely need everybody's commitments and rolling in right now. We're working on that. Debt is secured. So now it's just a matter of raising the remainder of the equity that we have. We have a lot of subscription already in place and reservations ready to go. If you have any interest, please reach out to us. Be happy to hop on a phone call with you, go through anything, webinars, details, et cetera, et cetera. So that's an example for you on 100,000. What does it look like, right? As I mentioned, we're highlighting this here in the red. We're taking on safer play. And I keep touching on that. And the reason why that's so important is because I've had a lot of investors, people in general saying, how's the market? What are your thoughts in general? What do you think is going to happen, et cetera? And I said, well, I don't know what's going to happen, to be honest with you. But I do know that it's a great asset and a great location, and real estate is still an incredible investment. You just need to finance it correctly. And the only way to kind of safeguard the deal is to deleverage it, right? Deleverage the deal, put more equity in. Yes, returns are a little bit less, but holding an asset like this in this location, it's simply a matter of holding through any kind of rough waters that may or may not happen. But you got to get in because this deal is an awesome opportunity, great property. It just needs to be financed right, deleveraged so you can ride through rough waters. The property itself, the fun stuff. This kind of gets into the details for you on the property so you can get excited. This kind of goes through sources and use on it, as well as kind of giving you some basic metrics of the property in general. So you can kind of go through, like I mentioned, just under 97% fully occupied at the moment. DCR and cash flow levels good. Class B, net rentable square footages and all that stuff, exit valuations, exit cap rates, all that stuff. So you can kind of see what we're looking to do in projections. So why Sycamore Creek? This is really key, right? We always talk about the story behind a deal. What is it? Why is it a good one versus the next one or another one you may be looking at, right? We see things, location, 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 and you hear that in real estate all the time, but it's even truer with an opportunity like this because of where it's situated. 28 minutes northeast San Antonio, up the I-35 corridor, 48 minutes south of Austin, Texas, about 30 minutes south of the new Tesla plant. You have about 4 miles from the Amazon Fulfillment Center. You're about 3.5 miles to the Randolph Air Force Base, and you're right up that I-35 corridor, and I'm going to show you an article here that you need to read from CBRE that's showing the explosion that's happening, industrial explosion between Austin, Texas, and San Antonio. And you need to understand this because we're smack right in the heart of that, and that's why this is such a key opportunity. So I always talk about being Walmart surrounded by Neiman Marcus, JCPenney, and Nordstrom, right? You want to be the B's surrounded by the A's. This is what this asset is doing. We are a Class B, solid Class B asset. We're going to move it to a B+, surrounded by the A's. We have A-class buildings. We have some solid B-class buildings, but a lot of A's just around the corner. We have Palermo. If you want to wait near the I-35, there's a couple A's and so forth. Surrounded by the A's, you want to be the B. So that way, regardless of markets, you're always full. People shop at Walmart all the time. Good markets, bad markets, they're always full. And then when bad markets hit, what happens to the people at the A's? They move to the B's. Always full. That's why you want to be Walmart surrounded by Neiman Marcus, JCPenney, Nordstrom. Key component. Renovation and value add. Big upside on the rents, right? We can push these things $200 plus a unit with the renovations we're planning. Management upside. We can go in, and I've already looked through going through the T12s and things we can do from reducing expenditures on the utilities to bringing in and changing, tweaking some of the management, the way it's set up, doing some other things to the building to really maximize that operating statement and management to make it most efficient. Great. Read this article. It's going to be on the next page here. I'm going to show you. Take a look at this. Read this article. The tech defense industrial explosion underway between San Antonio and Austin, Texas. You need to understand this because that is why we are smack in the middle of it. And that's why this is so important. Aerial views. Here's the property here. Randolph Air Force Base, 3.5 miles away. You literally come out here, make a left-hand turn on Schwartz Parkway, make a right-hand turn on Peterson Boulevard. Boom, 3.5 miles. Why this is so important, you'll see in just a minute. Number 2, Amazon Fulfillment Center, about 4 miles away. You come right down here, make a right-hand turn on Schwartz Parkway. The I-35 is right here. Austin, Texas up this way. San Antonio right down here, 28 minutes. You got about 48 minutes up here. This is about 5 or 6 minutes to the fulfillment center that literally sits right off the freeway, and the I-35 corridor passes right through it. So great location. You have the high school here. You have an elementary school sitting right here. You have, right down here, you have all the commercial. Down here, you got the Randolph Air Force Base. You have the YMCA and the library and the community center and all that stuff right here, literally next door. So location, location, location. Property. Classic interiors. Let me show you what we're going to do from moving from interior to exterior. Here's the befores. 1984 product in good classic condition, meaning they're not like destroyed, bad, ancient. It's just classic. It's originals. But we can keep a lot of these cabinets, right? Refacing them, resurfacing them, painting them, new poles, all that stuff, all new stainless steel or black appliances, backsplashes along the back, new countertops. Flooring in there, about 100 of the units have brand new LVP flooring. Okay, the rest of them have a combination of carpet and LVP. So going in there and tweaking that. undoing some of the popcorn on the ceiling, adding some new fixtures, both electrical and plumbing, washers and dryers in the units, all of that. So that's how we can go from before to after, before to after, before to after. So take a look at that in the pitch deck. Exteriors, okay? It's just kind of showing you the current setup of the exteriors, but let me show you what we're planning for the exterior renovations. Right now, the exterior is in great condition. We just did our full walkthrough of all 200 units, all the exteriors, scoped all the drain lines, checked out all the roofs, checked out all the siding, checked out all the wood, checked out all the windows, checked out all the doors. Anything and everything you can think, we've been in and out of that property the last 2 weeks. So our whole team's been on there. We're doing all lease audits, going through all the due diligence right now. Everything's checking off quite nicely. So before and after. Because it's in great condition exterior-wise, it's just a nice cosmetic paint job and moving it into a modern look, updating the signage, right, and the monument stuff. Leasing center, updating that. Great leasing center. It's perfectly set up. You got a common space up here with a leasing center downstairs. Great setup. And then the common areas and moving that where we need it to go. Adding more amenities. So what's really cool, I didn't even think about this. This is where the game changer's at. Even the A-class buildings, you guys, even the A-class buildings don't have what we're looking to put in here. Splash pad and a mini soccer field. Splash pad and a mini soccer field. And we know how to do this, and our team's already bid it out. So we have a good idea not only where it can go, because the site's set up for it, but cost efficiencies in that too, because of its location. So splash pad, give or take about 20 to 30 grand, we can put one of these in based on what we're set up in the property near the pool and what we've done for plumbing and drainage and everything. We can get it in there, respectively speaking, for around that. Valet trash, we're going to be adding that as an income revenue generator into the other income sources. Mini soccer field, we can do this pretty easily with some fencing right off to the side of the pool. There's a big grass area, it'd be perfect for kids, and they would love it. So barbecues and cabanas, dog park, right? We need that in there with a wash station. We have an idea of where that's going to go. Adding carports, another revenue generator, 90 to 100 carports we're planning to put in there, charging for them in addition to reserved spaces, which they don't do currently. They also are not really doing a full pet rent situation there for other revenue. So that's almost potentially 80% pets on the property. That could be as upwards of $60,000 in other income that we're not even plugging in. So I found out that the other day. Tech packages, where we can work with a company called iApartments. Come in, they'll fully retrofit each unit, put a keyless lock on it for entry on an app, okay? They'll put a hub thermostat into the system, as well as water sensors. And so that way both residents as well as our maintenance staff and management can monitor units, both vacant and occupied. Residents can go in there, they love this stuff. They'll pay up to $45 a month for it to have access to the unit. They can let dog walkers in, babysitters, cleaners, friends, anybody into their unit, right? Keyless. And then number two, having that HVAC hub where it's fully set up through cellular, not Wi-Fi, and they can do everything from their phone, which is amazing and allows us to monitor things too if you have any water issues or fire within the units. So that's going in. We have a plan for that. So going through the property, planned upgrades, unit mix, okay, showing you where the current market rents are at and then our projected post-reno. 56% of the complex is 2 bedrooms, 44% is 1 bedrooms. We like to see that, we love that. Allows us to push the revenue. Location takeaways, exceptional accessibility. Within 10 minutes of the I-35 next to the YMCA, which guys, literally you have this amazing park right here. Best kids place that I've ever seen. Public library, YMCA, the high school. And like I said, you have down around the corner here, you have the elementary school. If you come down Elbel, you have all the commercial that's sitting up over here. And this thing is literally smack in the middle of it. Highly educated population. 39% of the residents, 25 or more, have a bachelor's degree. 68% of the workers are what they classify as white collar. And affluent community. The median home values are nearly $300,000. That's up 11.5% from last year. Household income is $83,000. That's 30% higher than the whole other surrounding areas of San Antonio. 41% households earn over $100,000 a year. 41%. Great community. Jobs, rent growth, potential population growth. Major employers, Amazon, expanding, 7% population growth from 2021. If you can get 1%, that's amazing. 7% population growth for the area. Rents are up almost 15% from the fourth quarter 2021, and effective rents are $1,244 a unit right now in the area, and 97% occupancy rates for the surrounding Schertz, Texas. So all these kind of metrics are lining up where we need them to be. You can go through these. These are floor plans. All this fun stuff. This is some market data. You can go through this on your own as well. I wanted to touch on this because we talked about location. So you got the properties located right here in Schertz, Texas, 28 minutes suburb of San Antonio, and then 48 minutes to Austin, Texas. And then you have the Tesla plants right here. All this industrial corridor growth, guys, that's going on between Austin and San Antonio is unbelievable. Tech and defense, explosive growth on the industrial side. Read that article, okay? Can't touch on that enough because it's going to give you that confidence level of going, whoa. It's basically going to be one city, just so you know. And another thing to note, Austin, Texas is going to be Silicon Valley, not like Silicon Valley 2.0. Like the Silicon Valley in California is going to be Silicon Valley 2.0. Austin is going to be Silicon Valley 1.0. You can go through some of these metrics and stats. Economic drivers, main players within the area, hospitals, FedEx, CAT, Cisco Systems, USAA, all this stuff, Hulu. So what's cool about San Antonio that people don't know, 7th largest city in the country. Did you know that? 7th largest city in the country. You have 4 major bases, right? They call the joint bases of San Antonio. 4 major bases, mainly Air Force and Army. Then you have the National Security Agency, their middle command of the United States, that mid-central command outside of the East Coast. The National Security Agency is right in the heart of San Antonio and the northwest corridor of San Antonio, which is probably 30 minutes from this property. If you go down, get on the 410 and head right to the National Security Agency. So you can see the major players, what's going on. Most people don't know this stuff about San Antonio, and they're like kind of blown away. Amazon fulfillment just a few miles away. The Air Force Base, Randolph Air Force Base. Why is this so important? Number one, it's location. 73,000 direct jobs from that Air Force Base. More importantly, over 200,000 indirect jobs from all the companies that support the Air Force Base, right? Government contractors, everybody supporting this base, which is literally 3.5 miles away from the property, just around the corner. It's unbelievable. If you can't tell, I'm a little excited because I know it's a great asset in a great location that you can't replicate. Okay, markets may go up and down, things may change, but you can't change location. You can't change an asset, like just generally speaking. You just need to be able to protect things and move through kind of rough waters and rough markets and make sure you're deleveraging a property to ride through that. So going through the rent comps, studios in the 2-bedroom, 1-bath don't have the best comps to kind of market at, but you can kind of go through what we're looking at and kind of match it up from kind of where we're at and where we're planning to go. About $200 to $210 a unit on a bump, fully renovated. There'll be some partial renos we'll do as well, showing you the 1-bedroom, 1-bath and comping that out, where we're at today, where we're planning to go. Where we're at, where we're planning to go, this is the 2-bedroom, 1-bath, okay? Pepper Mill's a good one around the corner that's basically a syndication they did a full renovation on. Good one to kind of use as comps for these 2-bedroom, 1-baths in comparison to ours. 2-2s, showing you where we're at, where we're headed to go. And then the financials, you can go through these as well. So this is showing current T12. Obviously, we're going to have about 6 months or so left in 2022 once we close escrow. And then you really are kind of banking in on 2023, 2024, doing a refinance somewhere between 2024 and 2025. And then you're holding, say, up until maybe 2027, right? Depending on markets, where we're at, what's going on. But that's kind of the game plan. So that way we can kind of have a capital event here, right? Where we're refinancing out, giving you a percentage of your capital back on the financials, right? So you get of 100,000, maybe you get 30, 40% of that back potentially. That's what we're looking for. And then riding through to get to even a kicker here. And meanwhile, we're cash flowing the property and pulling that out as well. So this kind of goes through the limited partnership and investor cash flow projections. You can go through these, okay? Showing you the metrics as well, based on that, from total returns, annual returns, cash on cash, equity multiples, splits, etc. Okay, so here's the timeline again. So we're obviously in escrow now, doing due diligence and everything. We need commitments that are starting, which are in, and then closing probably towards the end of June, realistically beginning of July based on our timelines, and just kind of where we're seeing things trend at the minute. So 3 ways to do this. You can access our portal and click the links herein. Number 2, schedule a phone call with us. You can speak with myself, Rudy Medina, our other partners involved, and I'll show you them in just a minute. So if you have questions, send us a quick email. Love to be a resource for you. Accredited investors only. If you have a question whether you qualify for that, you'd be surprised. A lot of people qualify, they don't realize they qualify. So go through these. The last one is really important because you'll see, hey, pretty much a lot of people qualify on that last one. The team. I mean, the recent addition of George Abreu and his staff and his partners with Elevate CIG is really blowing the roof off, in addition with Rudy Medina and ourselves with this sponsorship team. I mean, you're getting a group that has over $500 million in deals, over 5,000 units of ownership currently, right? And just has been through 4 market cycles. I mean, the list goes on and on. So it's really, really important you understand that from the team. So obviously you got Christopher Poley, myself. Mr. George Abreu has about 4,800 units under his ownership with him and his team right now, currently within Texas. They got the Carolinas, they got Georgia, etc. Amazing guy. I've known him for years when he got started. Mr. Rudy Medina and Richard Simas with the Next Space Group. Hundreds of millions of dollars in deals they've been through 4 market cycles, up, down, left, and right. I mean, they make us look like the little guys because of what these guys have done and are currently doing. So super excited. You got a powerhouse team running this thing that's been there, done that. So accounting, you got bookkeepers, accounting, securities attorneys, business attorneys, transactional attorney, local construction crews with George Abreu and his staff with J&T Construction. They have a third-party construction division that's going to help us with all the renos and that assembly line factoring to go through everything. We've done all the due diligence going through everything, and we're getting all our CapEx budgets and everything lined up right now as we speak, so we're ready to go once we close. And then we have our local construction management as well as property management. Normal disclosures, legal disclosures, you can read through that. And then last but not least, your investing portal. So if you're an investor, you're going to get a 24/7 portal to log into, see everything in real time, what your investment's doing, all your tax documents, statements, distributions, all of that stuff in real time is going to come right through your investment portal. You can log in anytime you want, just like you're logging into your bank account. So any questions, reach out to me. I hope this makes sense. I know it's a lot of information, but I wanted to go through it in detail for you. Love to be a resource for you. Get on this week, part of our webinar. Give me a call, email, text, whatever it is. I'll walk through everything, answer a bunch of questions. We look forward to getting you involved. Take care. We'll talk to you soon.